The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to Squawkbox this Wednesday morning. These are your headlines.
Well, the House of Mouse, it's in the doghouse. Shares in Disney fall almost 10% on concerns of a slowdown in its theme parks. That's even as Disney Plus and Hulu, of course, posts its first profit since launching in 2019.
We'll go down a little bit in Q3 based on some ICC cricket rights out of India, and then in Q4 we will be back to profitability, and we'll build on that in 20.
Reddit shares jump almost 15% in extended trade, boosted by stronger than expected advertising revenues, as the social media platform reports its first set of results since listing. TikTok sues the US government, claiming a potential ban of its app in America would be an unprecedented violation of the First Amendment. Former Treasury Secretary Steve Mnuchin tells CNBC he's still keen on the business.
We're still very interested in buying it. We're investing in it because it may not be a purchase. It could be a spin-off and investing in it, which would keep the existing investors but dilute down the Chinese ownership.
The global debt pile gets bigger, surging by around $1.3 trillion. That's $1 trillion, ladies and gentlemen, to a fresh record high of $315 trillion in the first quarter. So you've got two Siemens Energies. You've got Siemens Energy, which is growing fantastically in so many areas, such as grid technologies. And then you've got Siemens Gamesa as part of it. And the CEO is going to join us very, very soon. Christian Bruch is trying to sort out the latter so that investors look at the former without worrying about the latter. It's a real problem for him. But there's a lot in this statement today. I think a lot of it's positive. And again, I'm looking at one line has really come up to me as well, which is the free cash flow pre-tax of up to €1 billion, seen previously negative of up to €1 billion. There are still big losses over at Siemens Gamesa. Second quarter loss before special items widening to €448 million. A year earlier it was 374. But it's the action over at Siemens Gamesa that I think the market is really most excited about as well. And unfortunately, Jochen Eickholt has decided to step down, or is stepping down, and Vinod Philip, who is a management board member, will take over as of 1st of August. But the group in the round has raised the 2024 outlook for sales, operating profit and free cash flow. I'm going to stop there because we've got Christian Bruch joins us now, who's the CEO of Siemens Energy. Christian, I can't possibly do justice in 1 minute to all of the flashes going on at the moment, but I've tried to separate the business, the cash flow excitement, the outlook excitement, compared with your ongoing action over at Gamesa. Just tell us things as you see it, sir. Good morning.
Good morning. And first of all, Steve, you did a good job in summarizing the key elements. I mean, we had a good quarter two after a great start into the year. We see a very positive order momentum in energy, and you see it obviously with around 25 billion order intake, and that drives cash. And this obviously improves our cash flow performance. You said it, it's a plus 1 billion expectation for the year, which is obviously also strengthening the balance sheet. And this is all the things in the right direction. And at the same time, as you said, we are tackling the things in wind. We have been working over the last 2 years on a lot of things. Jochen launched a lot of the right activities in terms of this operational turnaround. We knew it going to take years for us to really get it back on track. We now decided, and I think that is the element in wind also today, on a long-term strategic plan to bring it back to double-digit margin. And obviously, at the same time, as you said, we have to think jointly with Jochen about how do we do a generational change, because we are embarking on a long-term program now looking forward. We will still need to work through the quality matters as we are doing it and the ramp-up of offshore. But at the same time, it's also, hey, going forward, we're going to be active in onshore and offshore. We're going to focus the business in onshore more. We hammer down on the volume product in offshore, and are strongly convinced, obviously, to bring it to a double-digit margin. And this combined, obviously, with a super performance in grid technologies and a very strong gas services business, that is positive messages really today. But after all, I also have to say, we go in step after step after step. I mean, that is what we said before, and that is what we're currently doing.
Look, and thank you for that explanation. There's been a huge rally in your shares off the lows, albeit they've still got a long way to go. And this really kind of happened when the state came in and you got your financing package sorted out, and now you're taking very affirmative action on Gamesa as well. But there are two issues. There is the quality control issues, which you're working through, and I note your point about those double-digit margins going forward as well. But there's also the competitive position as well, and those Chinese manufacturers, they're not going to let go as well on the vicious competition out there as well. So yes, you're working on issue number one. Two, you're always working on the second issue, is how to be competitive as well. But how tough is the market out there, even when you sort out your quality control issues, Christian?
Look, I think at the end, it's not different than in a lot of other business. It's about focus. It's about focusing on the right markets and focusing on the right products. You have Chinese competitors also in other areas. And you should be careful in which market you really go all in and full-fledged competing. Where does it make sense? Where do you have the long-term profit pools? But definitely I'm convinced also in onshore as well as in offshore, there are globally markets, and you see it also in our direction, for example, in onshore, where we clearly focus on Europe, we clearly focus on the US. The rest is more opportunistically. We're not going to fight for markets where we don't see the long-term profit pools. It's about focus and selectivity. And we see it in other business areas as well. But I'm also not shy to say we can compete globally. It will be a fierce competition, no question. And this is not just the Chinese, this is other competitors as well. But this is why I'm saying it's so important to do what you're doing right. And for this, it needs focus, focus, focus. This is what we're trying to do. And then I'm confident that we can compete. But we will be very selective, as we have also proven in the other business areas. This is the way really then gradually to drive up profitability.
Christian, there's been a lot of speculation about when you would bring back those revised turbine engines, the 4X, the 5X, the wind turbines. The market thinks that you might be on the cusp of that. Can you just put on the record for us, are they coming back to the market anytime soon?
Yeah, they're coming back to the market. We are preparing at the moment for the 4X in Europe towards the end of this fiscal year to restart the sales. For the 5X, we intend to launch it in 25. At the same time, we're obviously ramping up on the offshore the sales on the what we call Mark 6, so the SG14 platform. So we are on the trajectory to prepare the go back. But I also say we always do it very tested, rigorously, and step after step. This is what we're doing. But there is a plan going forward in terms of how to now stepwise get back and also get the organization ready for this. It will take some time, I clearly say this, to get the volume up, because obviously you always have a delay between starting your activities, getting orders in, getting the revenue through. So don't expect it to go overnight. We will also amend the organization towards that, but definitely we will start in end of 24 with the 4X in Europe, as I said.
Christian, thank you for that. Let me just push on to what you're seeing out of the revenue line, and in particular, Grid Technologies, at 3.7% bounce in revenue on a comparable basis to 8.3 billion euros. What type of demand are we seeing for those Grid Technologies at this point? Where are we at in the cycle?
Yeah, I mean, what you're seeing is that this has been an area which has been completely underinvested over the last decades. And if you want to build a more electrical world, you have to invest into grid. And that is a long-term investment cycle. I think this is what we're seeing. And we just lifted up the annual expectation on revenue growth to between 32 and 34% growth. And I think we're seeing a long-term growth trajectory in front of us. That is something where we have to see how fast can we really fulfill all the demands of our customers. And it's more than just energy transition. I mean, what you're talking to today is energy transition on the one side and electricity demand growth on the other side. It's a much stronger electricity demand growth. You talk about data centers, what you see today, than what people expected 3 or 4 years ago. And that all goes back to the grid, because at the end you need electricity.
It seems really geekish of me to be so excited about Grid Technologies, Christian, but I'm going to try and take my viewers down along this road with me as well, because I can't help thinking that until we get cohesive, cross-border grids set up and aggressively invested in across the European continent, we're still going to have a lot of the same old problems, regardless of how much wind, regardless of how much electricity we produce. Getting it to the consumer is going to be the problem. Do we now have cohesive grid strategies at a Brussels level, at a Berlin level, at a Paris level for the whole continent? Or are we still just in this piecemeal world where we're not thinking big enough?
First of all, I do agree with you. If you look on Europe, one big strength is going to be to have this interconnected grid across the region. That is one big strength Europe could use. I think everybody understands it. It's now getting all the stakeholders aligned. What do we need to do for it? And it's a lot about interconnectivity. It's a lot about how do you make sure that you really work cross borders. I think it's on the table of a lot of people, Brussels, the national governments. There's definitely more to come, also to get it at a cost base which is affordable, not to forget. And this will need a lot of alignment, standardization. How can you drive it? I think we're going in the right direction. You see it in the order books. People are much more investing. More to come, definitely. And definitely also more coordination across the different countries needed. But the subject is, from my perception, high on the agenda of everybody. Everybody has understood that the grid is in the center.
Christian, a pleasure to catch up with you this morning. Thank you for running us through the numbers. Christian Brook with us, the CEO of Siemens Energy.
It's a shame Christian had a hard out at 10. That's why we had to let him go. We'd have kept him for a lot longer. But absolutely fascinating. And the thing that's been drummed into me for so long, for so many of these amazing CEOs that you and I speak to in Davos, and Christian especially and others, is that you can have as many wind turbines as you like. You can have as much solar as you like. But unless you invest in getting proper means of getting that energy to the customer, to the customers as well, you can forget it as well. And I think for too long we've been wrapped up in not giving enough support to our industries, giving up to having too much permitting problems, too many regulation problems as well. And Europe just seems blind to this really obvious area. Getting excited about grids is important for all of us.
When you say that there's a blind spot, it's interesting because the green and digital transition really very much at the heart of the European Commission's objectives here. So it's funny, there's been so many problems on regulation and permitting. It's extraordinary, isn't it?
It's frustrating being a European sometimes.
We've got to push on. We've got numbers crossing everywhere this morning, and AB InBev numbers as well. They're hitting the wires. Arabile has been looking at the numbers for us. I did notice that the organic revenue growth number is still quite slim, 2.6%.
Yeah, 2.6% to 14.5 billion US dollars there for that number then for AB InBev. Look, they did, however, improve on a lot of their metrics, but really for the most part meeting the estimates of the market, particularly on that top line that you made note of there, Karen, as well, quite significantly. Just overall, let's remember that the share price has only gone up around 4% year to date. Even the same mark around the 12-month mark, as you can tell as well from that graph as well. So significantly, this is a company that has been talking a lot about premiumization, I suppose, as much of the beer brands have really been speaking about as well. So the brewers really speaking about premiumization, one seeing the benefits of that continued premiumization because they've managed then to grow their global brands by 5.2%, Corona leading the way then by growing 15.5%, and that's actually outside of its home market, particularly being Mexico. The big problem perhaps could be that volumes are down. That's going down 0.6%, but managing to raise prices then and ultimately making up for that in growth for their revenue. Earnings then, the bottom line, well, that managed to go up 16%, so 75 cents then per share on that one. Again, that estimate had actually been lowered quite significantly over the last 30 days or so, so still managing to beat the market when it came to that. Gross profit, $7.9 billion there with a gross margin of 54.3%. The worry may even be just the elevated costs for commodity cost inflation, but they're managing to optimize their business, and that is what has moved them forward. But the top line there, $14.5 billion, up 2.6%. That's the revenue figure. Anheuser-Busch InBev. Karen.
Thank you very much for that, Arabile. Let's circle back to the markets and the action we saw stateside. Somewhat muted, you've got to say, after some of the recent trades we've had. At the Dow, the S&P eking out slight gains. And don't forget, a huge focus still on monetary policy after the jobs report last week. And looking forward to more speakers again this week. We've got the NASDAQ pulling down by about 0.1%. So some softness creeping out into that major market. NVIDIA actually won the more negative trades in session yesterday, impacting both the S&P and the NASDAQ. A lot of earnings still crossing, and Disney team will be breaking that down a little bit more. Earnings reaction from those US markets too. A quick look at the dollar trade. The front and center focus really has been around the Japanese yen. The comments from the BOJ, almost DEFCON when they're talking about jawboning here. Ueda saying the central bank may take monetary policy action if the yen moves have a big impact on inflation. And typically you see a lot of central banks steering away from that link to monetary policy. So fascinating. Got dollar yen this morning on the front foot again as the yen faces more declines. 155.21 the handle. Sterling euro also showing some slippage. Asian markets, the early trade looks like this, red across the board, and some red ink in particular for Japanese stocks. Tokyo sliding more than 600 points or 1.6%. Modestly downbeat for the other major markets. So you can see the Shanghai Composite in China down by about 0.5%. US futures early on in the day in store for us later on today. We are seeing more red ink cropping up on those US markets. So a tilt into negative territory is what we're expecting later on. Well, coming up on the show today, a down day for the House of Mouse as Disney slides on the back of soft guidance. We'll dig into the numbers. Plus, Reddit bounces after beating in the first earnings report since its IPO. We'll be hearing from the CEO. And as earnings season continues here in Europe, we'll break down the results out of Munich Re with the CFO, Christoph Eureka. That's a first on CNBC interview coming up at 8:15 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
Investors weren't a fan of Disney's second quarter earnings release, sending the stock almost 10% lower, despite the firm's core streaming segment turning a profit 2 quarters earlier than expected. Ari Billet looking through the numbers for us.
Yeah, so many permutations here, so many moving parts, certainly with the story. Disney shares posting pretty much their worst performance, particularly then since November. So big downturn when it comes to this number overall. Then November 2022, pretty much, losing the firm around $20 billion in market value. That's around the size of entertainment rival Warner Brothers Discovery. So a big decline there. It's the stock's worst day then since the company reported a disastrous full-year earnings release. I was back in 2022 that ultimately set the ball rolling then for ex-CEO Bob Chapek's departure. So why did this stock move so negatively? Why did we have such a negative reaction? Well, the company did actually beat on the adjusted earnings front. They're coming in at $1.21 per share. Even posted more than $22 billion then in revenue. Only just missing out then on the estimates, just by a whisker. But one of the reasons could be a disappointing forecast then for the company's parks unit. Disney says operating income for the segment will come in flat next quarter. That's way below Wall Street hopes for a 12% bump. But the company is actually investing in this. They're going to spend $60 billion over the next 10 years in their theme parks division. So perhaps something else to be taken with regards to this. The CFO, Daniel Johnston, warning on the earnings call that demand is starting to normalize then post-COVID levels. That's concerning for a unit which did make up more than half of Disney's operating profit then over the last year. Of course, streaming will be the most important one to also look out for. That took some of the shine out of the streaming unit numbers as it did the core entertainment, Disney Plus and Hulu, then turning a profit for the first time 2 quarters sooner than expected. It was only supposed to be in September. However, ESPN Plus did post a loss, holding the overall unit then in the red by $18 million. That is still a big improvement, however, from the near $660 million loss this time last year. Now, our US colleagues got to speak to the CFO, Hugh Johnston, who applauded the pace of the turnaround at the segment.
Maybe most heartening of all was the improvement in direct-to-consumer streaming. Last year, that business lost about $600 million, and the entertainment portion actually made $47 million. That's a couple of quarters ahead of what we said. We said we'd get there in Q4. We got there in Q2. Overall, streaming was up 12%, which led entertainment to 5% revenue growth for the quarter.
Well, mixed bag, wasn't it, as we unpick those numbers? The traditional business, don't forget, this has been a real part of the Disney profitability for a long time. And if you look at what's transpired for other major players across the industry, it's difficult. Traditional business in television is very, very difficult. And that's coming through in the numbers now, decline 8% to $2.77 billion. But on the other hand, I think that was also surprising that the new parts, the streaming, was doing quite well in the current quarter, because that's also been difficult for some of the upstarts lately to make a profit.
And we're talking about a division that's lost $11 billion, right, since its inception in 2019, but yet it's now able to turn that profit. But really, it has been because of cost optimization. The company has decided to cut down quite a few costs, in fact, and even raise prices in what was an aggressive push, of course, doing pretty much what you saw even out of Netflix. Elements like password sharing were pretty much cut to some extent, raising prices quite significantly to get some premium versions of their business coming to the fore. That has certainly helped the company quite a lot. Disney and Hulu turning a profit is going to be quite significant for the entity overall. But those shares coming down 9.5%, I guess the outlook matters more than anything else right now.
I think it absolutely does. And look, let's look at the shares over a long-term period. They were $197, give or take the change, back in 2021. Now trading 105 before $105.39. So down over the 5-year period, as you say, 21%. But from that high, down dramatically more. Look, taking out the COVID trade is something, there's a great FT article today, we can look at this another time as well. Taking out the COVID trade has taken a long time for a lot of companies, i.e. when everyone was stuck at home, you bought your Pelotons, you did your conferencing calls, you watched streaming as well.
We had every streaming service on the planet. Right?
Indeed, and unfortunately my family still has them, despite the fact I've watched none of them. Although I hear Peacock is very good. But the point, I've got to say that. Nice but the point is as well, taking that COVID trade out has taken a long time for some people, looking at subscriptions saying, well, do I actually still need this? Do I watch this as well? But what I thought was very interesting, and you've touched upon it, both of you actually, is that the outlook is now key as well. And I focused actually on again, you talked about traditional parts of the business. Not on the streaming, and again, it's almost unfortunate for them that they start turning a profit in streaming after those 11 billion losses. You think, oh, the market might take it really well on another day. But they concentrated on the fact that they've got these new cruise ships, which are costing a lot of money as well. The fact that theme parks is being flagged as a slowdown. And again, I'll put that into the broader thematic that is there tension at the sides from higher interest rates and cost of living crises that's costing Biden so much as well that actually people don't feel economically wealthy. They are picking up their revolving credit, they are relying more on their credit cards, and they are cutting back, as you've been talking about for days, on their marginal expenses. Yeah,
I want to pick up on your point around streaming, how this impacts streaming. The password crackdown really coming in June. From there, you really see a ramp up across the business. Does that mean consumers take stock of some of these services they've bought and say, look, there's not as much value as I thought. I did share it. Our household uses it. It's more difficult to get in. Do we cut back because it's actually making it more difficult to access?
I think actually what's happening is people are deciding to come in when they want to watch something and then deactivating their subscriptions when the one thing that
it was
they don't
boiling
want
frog strategy previously,
so,
i.e. you never noticed the $5, the $6, $7. Now a lot of these streaming services, including the music streaming as well, let's put those in as well, they're putting up their prices quite aggressively at the moment on a fairly regular basis as well. So I don't think it's so much that the viewers aren't noticing anymore and can have 5 or 6 or 7 or 8 different streaming services. I think they're beginning to have to make some serious choices, which is why I understand that they're all watching Peacock.
Let's talk about the parks and the theme parks just a little bit later on. I think that's a very important one to look at.
All right, we'll do that. Perfect, thank you. Meanwhile, Reddit posted a 48% revenue increase. Wow, to $243 million. It sounds a big increase, but $243 million in the first quarter, well ahead of expectations as ad revenue outpaced social media rivals with growth of 39%. The results are Reddit's first since its market debut. The CEO, Steve Huffman, saying the firm's investments in AI and machine learning will support engagement on the platform.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com or join us again on the show with me, Steve Sedgwick, and Karen Cho, weekdays on CNBC.